We're gonna start with inflation. So the CPI, we just got it. Surprise, we got a 0.1% increase. The forecast of the market, I think they were too optimistic, saying that they expected a 0% increase. Flat, came in flat, just as the other one, the previous one, for the month of October. But surprise, just a mere 0.1% increase, but still it's an increase on the market. So this is a CPI reading for the last 12 months.
Hmm.
Overall, we see how since November 2022, the recording, it's been decreasing steadily to 3.1%. Still, it's up from the what the Fed has been saying for more than a year. They want inflation to be at 2%. Right now, we're going to look into what's happening overall on the CPI. Well, Julia, I did expect a little bit of a market reversal, a
Hmm.
little bit today, getting this higher than expected uh, return on the CPI. But here we're gonna break down what's happening and what's your opinion, Julia, and here in chat, everybody, between the core CPI and general CPI. The core CPI actually excludes house, food, and energy, and
Hmm.
the general CPI takes everything into account. Here we see that what's actually going up: food prices,
Hmm.
services like energy services, shelter, transportation services,
Hmm.
and what's going also down. Well, we see it here in red, but I actually had it by category year over year.
Oh, nice.
I have a debate, and there's a lot of debate also on the internet that says, okay, so inflation is truly down when you exclude housing, energy, and also food. Yeah, inflation will be down if you
Exclude
exclude
extremely
inflation.
important categories. Yeah. I think it's so important to take energy into account just because like right now, for example, like we're seeing a pretty significant decrease in the cost of energy according to this recent inflation report. That's going to have like ripple effects across all of these other sectors. When energy is cheaper, producing food becomes cheaper, right? Transportation becomes cheaper. Building stuff becomes cheaper. Energy is like at such the core of our economic development that I think it's really important to take it into account. And I also think it's quite promising to see energy go down. I think like with everything consumer wise, it's sticky. Like it takes a while to see like policy changes actually reflected in inflation and reflected in prices. So like, but whatever, like this decrease in energy, I think is a really important first step. So I think like looking at that and taking that into account, even though I understand the utility of taking it out to understand certain aspects of the economy, I think it's so important. So I think this is overall promising, but like everything consumer wise takes time, basically. Like it took a long time of the Fed raising interest rates before it actually got reflected in consumer prices. So I think this is a promising first step, but it's just important to remember how long things can take actually to get reflected on actual consumer prices. Yeah.
No, yeah, totally. And one of the main factors that has contributed is also gas going down.
Mhm.
Gas prices, crude oil has dropped from 95 about 2 months ago per barrel to below 70 today. So definitely the overall items, as we saw it, the headline CPI that we all see and that the media wants us to see is at 3.1%
Mhm.
year over year. But many of them, such as rent, the housing has been such a big trouble.
Yeah.
Um, and I think many investors, we're going to look into it deeper, have actually overseen what rent has actually gone up. It's
Mhm.
higher than the Fed wants it to be year over year. And right now, Jerome Powell has been actually very vocal about saying that we need prices to actually go down. That it's actually unaffordable for the new generations such as me and the younger people.
Oh,
But
for sure. Yeah.
many are just interested in the all items inflation at 3.1%. Obviously, gas has helped a lot to decrease the prices in overall, say, like a dominant effect.
Hmm.
But we're going to see more about the rent and seeing the inflation by category. See, there's a lot of like many noise, I think, on the market. For example, Fundstrat from Tom Lee said the entire rise of core CPI, core actually excludes energy and food, which I believe the the case to use, and the most important is the general one, uh, was due to cars and housing. Hopefully, those in FOMC see the services figure are distorted by car related services. bottom line, we are buying this dip.
I feel like the baseline cost for a car has just gone up because they've gotten so nice, I guess, in terms of like their feature set. Like every new car model, like the baseline whatever middle class car just seems like a luxury car from a couple of years ago. And so it seems to me, at least as a consumer, that the baseline price for that has just been going up. And I mean, like, I'm glad that the Fed is taking inflation in the housing market so important, just because, like, that's a really big source of like intergenerational wealth, for example. So, like, if you're lower class, but you manage to buy a house and then you transfer that house to your kids when you die, that can bump them into middle class, right? So, like, it's really important for just like mobility, I guess, and that sort of thing for people to be able to get housing and not just like rent forever. So I'm glad that they're taking it seriously. And I'm not at all surprised that like cars are just getting way too expensive to be able to feasibly buy.
This is the numbers, and what I was gonna tell you, Julia,
Yeah.
but it's very important, is that J. Powell has said it, that they are watching core services, excluding housing inflation,
Hmm.
which actually jumped 0.4% last month, and annually is actually at 5.3%, well above that 3.1% headline that everybody's seeing right now.
Hmm.
Many of us are watching it and going with it, saying, okay, inflation is down. But Jerome Powell has said it. And as we also mentioned it with the rate cuts, he said that the market is pricing Fed rate cuts pretty soon.
Hmm.
And he also has said that one of the main factors they're watching a CPI report is actually services, excluding housing. And they have actually gone up. Prices are not decreasing really, they're actually going higher at a slower rate. Year over year, the CPI reading is at 3.1%, but in many basic necessities is much higher.
For sure.
Car insurance almost 20%, transportation 10%, even though gas prices have actually lowered pretty significantly. And these were actually higher, but in the past 3 months they're actually lowered. Car reparation inflation 8.5%, food away from home inflation, restaurants 5.3%, and electricity inflation 3.4%. So way higher than the 3.1% headline reading.
Yeah, for sure. So and also, yeah, again, kind of feeling somewhat optimistic for the future, just because when you do have lower commodity price, like lower energy commodity prices, that will like ideally translate to lower prices across other sectors. I think like most of them, just because of how dependent we are on technology, energy, everything like that. So that's obviously like speculative take, but I think a pretty grounded one. So that's making me feel optimistic about the future. But obviously, like timing is everything, and things, especially in the consumer sector, to translate into the consumer sector take a very long time generally.
A forecast from the CNBC survey that they actually got. So for tomorrow's meeting, they're expecting rates to actually stay the same at 5.29%. And what I thought interesting is to see that they're actually expecting a higher forecast of a soft landing for the current economic outlook of a 47%. They're actually expecting that. And what's your opinion, Julia? Do you think we may get a hard landing or a soft landing?
Honestly, I think it depends on how sticky certain like some of the sectors that you talked about remain, to be honest. Like if we do continue to see inflation across a lot of these very important core sectors, I think that the Fed is kind of like held off on more aggressively raising rates, but I think they still have the same target vision in mind. So if it keeps going up, like if prices, especially across, I think housing keep going up, I'm expecting, like, I think there could be another hike in the future. I don't think that's likely. I do think like we're going to stay the same and then decrease whenever possible, which is kind of more consistent with the soft landing. But I think if we do wind up raising rates again, it's just gonna, I think hard landing is definitely viable, but it's relatively unlikely because that's not good for any politician. That's not good for any policymaker, especially leading into an election year.
Market expects here.
Hmm.
Just like such a smooth line to the downside on the Fed funds rate. I think the market's been way optimistic with this. I don't think it will be such a smooth downward line on the rate cuts, especially with what Jay Powell has mentioned. But this is what the market expects.
Hmm.
We expect the to hold the same rate for 3 more meetings, including tomorrow's meeting, and then start to decrease it starting in April or May.
For sure. Yeah, I think for me, it's kind of like helpful to have these sort of market expectations, but always important to keep in mind the possibility of like a black swan event potentially happening or some like much larger unexpected macroeconomic event, such as I know people have been talking about like consumer debt, credit card debt, auto debt, student loan debt, and the possibility of defaults on that, as well as external factors like, like the Chinese housing market, for example, potentially having more problems. That's been a big topic of conversation, or other international wars that could create issues with our supply chains like it kind of did in 2020. So it's always important to note that like looking that far out in terms of like from the plot that you looked at previously, looking at like how likely cuts are according to different meetings that far in the future, it's always important to note that like anything's possible. So risk management is just so important when it comes to just setting positions up and going into years like this.
To finish this, some good memes. Like I want to say, inflation is like wind. I can see it, but I can feel it.
I can feel it. Oh man.
Real inflation against CPI inflation.
And CPI inflation, I like that.
The CPI, actually, the one that the Fed uses more is a PCE inflation.
There's so many inflations.
The one the market likes the most is a CPI inflation.
Yeah, that's the one everybody talks about, but there's so many inflations.
Yeah, my favorite one. Due to historical inflation and rampant food price increases, the 5-second rule has been extended to 10-second rule.
Have you ever seen the perpetual motion machine with like buttered toast tied to a Vans shoe?
No.
Because you know how Vans, when you throw Vans the shoe, they always fall face down.
Oh yeah, I've seen that.
So if you take like buttered toast with the butter side up and you tape it to a van, it'll just keep spinning, so you get infinite energy.
Oh no.
That's a lie.
I never seen it. But yes. Yeah, this is it for the CPI reading, the CPI report of today. I think when we see this kind of news, we should get a little bit more deeper into what it's the real changes, not only just see the headline. There's more to it, and we just saw it. There's a lot of categories that the CPI uses, so I will pay more attention to the one with including food and energy. But yes, this is Julia.
Nice, dude. Thank you for putting this together.